So our first presenter after me this afternoon is Monte Anderson. Monte is a manager with Trout, Ebersol, and Groff. He joined the firm in 1999. Monte leads the firm's state and local tax practice group, like we like to call the SALT group. He provides complex consulting services and practical solutions to clients by delivering high-level insight to the confusing area of state and local taxes. He's a graduate of the University of Iowa with a Bachelor of Science degree in accounting and a Master of Accountancy degree with an emphasis in taxation. Come on up, Monte.
Yeah. Okay, thanks, Robin. So this morning when I got ready, I actually had my ties out, and I had the tie that I wore in my photo, and I specifically decided not to wear that tie for that particular reason. So at any rate, so it's been about a year and a half since U.S. Supreme Court's decision in South Dakota v. Wayfair. So what I want to do today is just quickly review the issues that brought about the case, talk about the decision, and then go through some of the impacts we're seeing with our clients. So a quick example a lot of us are familiar with. In the recent past, we got a PA resident who's in the market for a high-end television. He can go to the local retailer, buy the item, and pay 6% Pennsylvania sales tax. You can also shop online, get the same price, free delivery, and then for some strange reason, sales tax charge is zero. So what's happening here is that since the 1930s, mail order and then online sales across state lines have by and large been exempt from sales tax. So by 2017, this really becomes a problem that the states are seeing. They're estimating a loss of about $17 billion annually in sales tax revenue from online purchases. So if you're doing business in other states, you've likely heard the term Nexus. So to have Nexus, or an obligation to file and pay, there has to be a sufficient linkage or connection to the state for that state to be able to assert its tax. So in 1967, the U.S. Supreme Court was asked to decide on the issue of sales tax nexus. They ultimately ruled that a state cannot require an out-of-state seller without physical presence in the state to collect and remit sales tax. Court reaffirms this again in 1992, so we have a very long-standing precedent. Physical presence typically means permanent establishment through building, employer agents regularly present in the state, or delivery and company-owned vehicles. So by about 2016, states are really unhappy with the physical presence protection afforded to online retailers. So South Dakota, along with a number of other states, respond by passing new laws, and these new laws are triggered based purely on economic measures. So this is really what the states have wanted all along. South Dakota's law is that remote sellers that meet one or both of the following criteria have economic nexus for sales tax. So one, gross revenue from in-state sales exceeding $100,000, and two, sales for delivery in-state in 200 or more separate transactions. And for analysis purposes, just note, sales are attributed to states based on delivered destination, and that's not necessarily going to be the same as your customer's billing address. So Wayfair ultimately challenges South Dakota. The case gets to the Supreme Court in 2018, and the narrative in this case is really very similar to the prior cases, so I give it the 2.0 tag. Wayfair is a leading online retailer of home goods and furniture. They have no employees, agents, or property in South Dakota. So the facts are very straightforward. The court reviews this argument again, and they note specifically unforeseen technological and social changes brought about by the internet. So this is a very big deal. And they also see Wayfair promoting consumer use tax avoidance directly in its website advertising. So that's not viewed terribly favorably by the court. So they see things a little differently in this third examination, and I think we all know what the result of the decision is. In June of 2018, The court finds in favor of South Dakota. We have a landmark decision for retail sales tax law as we know it. Physical presence is unsound and incorrect, and economic nexus and virtual context alone are now sufficient to establish nexus. So this is a pretty big deal. We can, blame Wayfair and other players like Amazon, who definitely have egg on their face. Our part as use tax avoiders, I find a little problematic, especially in Pennsylvania, and I can't really give any more of my opinion while I'm on record here. I'd be happy to talk to you later. But if you know the whole story, the states are really kind of the sinister, what I call the sinister actor in this play. They kind of get their just desserts, and their only option really is a bailout from the U.S. Supreme Court. So following the decision, the states see South Dakota's economic nexus law as the new lowest possible standard to impose economic nexus. So what the states do is they rush to enact these standards, and we're 17 months out, and states with sales tax economic nexus enacted are in orange on the map. The 5 states in green are states without a state level retail sales tax, and then only 2 states, Missouri and Florida, have yet to enact, and they are still considering what to do. So like many of these state tax initiatives, the concept of economic nexus is consistently adopted, but it's done so in a non-uniform, inconsistent manner. So in establishing their threshold measures, one group of states tends to follow South Dakota and uses gross sales, which is typically inclusive of resale exempt and non-taxable sales in your threshold. Another group of states is using taxable retail sales only. And then, of course, within these 2 groups, there are finer distinctions depending on the state. Another thing some states have done is increase the revenue threshold above $100,000 to up to $500,000 or anywhere in between. So because of these nuances, sales by state should really be analyzed based on point of delivery and then further separated by retail or exempt sales. And then you use that information to determine if a particular state threshold has been met. So now that you have a good working definition, we encourage you to get your mobiles out and play along here. The polling question is, does economic nexus affect your business? I think it was up before I came up to the podium. So we're very curious. So in making these threshold determinations, non-retailers and wholesalers should really be concerned with their retail sales channels. So do you have a direct-to-consumer website market? Do you have marketplace sales through something like eBay? Do you have resale exemption certificates where no tax is collected? And are you selling materials to final taxable consumers like contractors or installers? So as part of the mitigation process now, proactive exemption certificate management is now recommended for all customers in all states. So just note that states' sales are likely deemed taxable in any state without support of a valid exemption certificate. So this is important now as these thresholds are crossed. Make sure you're getting the correct form, which may be a state-specific form based on delivery destination. Watch the expiration dates. Some will need updated. So I know this is a lot of information, so to bring this in, let's review important economic nexus takeaways. So economic nexus for sales tax may apply to any multi-state business. Non-retailers, even with minimal or no retail sales, may have technical filing requirements, so try to understand how these rules pertain to you. As a best practice, get exemption certificates for all customers in all states. And in the area of noncompliance, while purposeful noncompliance can be an effective strategy, you want to approach this one carefully. So what we've seen in the past is that in the area of M&A, which is mergers and acquisitions, state tax noncompliance almost always is an issue, even when it's immaterial. So this is really untested in the area of economic nexus, but just think about that one a little bit. And then lastly, states can be pretty unforgiving in the area of uncollected sales tax. Something known as the tragedy of sales tax is uncollected customer sales tax will ultimately turn into your cumulative tax expense plus penalty and interest. So the Wayfair decision has really brought about major changes in the area of state taxation. States are really pushing this idea of economic nexus. We're already seeing it applied to income and other tax types. And this is really a pretty unfortunate outcome for small taxpayers. We really feel your pain on this one with the newly established compliance burdens. So as you try to figure out what this means to your particular business, please use myself or your trial point person as a resource, and we are definitely here to help. Thank you.